The world trades oil in dollars, countries borrow in dollars, banks panic in dollars, and when things go really wrong, everyone suddenly wants more dollars, even America's enemies. That's the strange part. The United States is now over $35 trillion in debt. It prints money at a scale that would collapse most economies. Its political system looks increasingly chaotic. And yet, the US dollar still sits at the center of the global financial system like nothing else even comes close. Why? Why does the entire world continue to trust a currency created by a country drowning in debt? Because the dollar is not just money, it's infrastructure, it's leverage, it's power. And over the last 80 years, the United States built a system so deeply embedded into the global economy that replacing it may be far more dangerous than keeping it. But right now, cracks are starting to show. Countries are quietly looking for exits. Gold purchases are surging. China is building alternatives. Russia already tried. And every few months, someone announces the death of the dollar. Yet during every crisis, the exact opposite happens. Money floods back into America. Back into the dollar. Back into the very system people claim is collapsing. Which raises a bigger question. What if the dollar's greatest strength is that the world can no longer function without it? To understand how we got here, you have to go back to a hotel in New Hampshire. Summer, 1944. World War II wasn't even over yet. Europe was shattered, Britain was broke. Most major economies were either bombed out, starving, or drowning in debt. Meanwhile, the United States was booming. American factories were producing weapons, steel, machinery, fuel, food. Half the world was at war. America was becoming the world's industrial engine. So representatives from 44 countries gathered at Bretton Woods to redesign the global financial system. And the deal they created changed the modern world. Currencies would now be linked to the US dollar, and the dollar itself would be linked to gold. $35 for 1 ounce. Fixed, stable, predictable. In simple terms, the dollar became the bridge between gold and the global economy. And because America held most of the world's gold reserves after the war, everyone accepted the arrangement. At first, it worked beautifully. Global trade exploded. Economies recovered. America became richer. The dollar became stronger. But there was a hidden problem baked into the system from the beginning. The world needed more and more dollars to grow. More trade meant more dollars circulating globally. But the more dollars America printed, the less believable the gold backing became. It was like writing more claim checks than there were coats in the building. Eventually, someone was going to check the closet. And in the late 1960s, countries started checking. France especially became suspicious. French ships literally arrived in New York demanding gold in exchange for dollars. Which is an incredible image when you think about it. An international bank run, involving warships. America had a problem. Too many dollars overseas, not enough gold. So in 1971, President Richard Nixon went on television and essentially said, the dollar is no longer backed by gold. Temporarily, of course. It's still temporary, 55 years later. That moment should have destroyed confidence in the dollar. The world's reserve currency had just broken its main promise. But something strange happened. The dollar survived, and then became even more powerful. Because by that point, the system had evolved beyond gold. Now it ran on something else. Oil, debt, and military power. In the 1970s, America made a strategic deal with Saudi Arabia. Oil would be sold globally in US dollars. In exchange, the United States would provide military protection and political support. This created the petrodollar system. Now every country that needed oil, which is basically every country, needed dollars first. Japan needed dollars. India needed dollars. Brazil needed dollars. Germany needed dollars. And suddenly the dollar was no longer just America's currency. It became the operating system for global trade. Think about the absurdity of this. A factory in South Korea buys oil from Saudi Arabia, using dollars created by the United States Federal Reserve. Neither side is American. But both depend on the dollar system. That dependency created permanent demand, and permanent demand created enormous power. Because once the world needs your currency, you can do things other countries can't. America could borrow huge amounts of money at relatively low interest rates. It could run trade deficits for decades. It could print money during crises without instantly collapsing the currency. Other countries don't get this luxury. If Argentina prints aggressively, investors panic. If Turkey does it, the currency crashes. But when America prints trillions, global investors still buy US Treasury bonds, not because they love inflation, Because they trust the system more than the alternatives. And that's the key. The dollar doesn't dominate because America is perfect. The dollar dominates because the alternatives are weaker. China wants the yuan to become a global reserve currency, but reserve currencies require trust. Deep trust. Not just economic size. Investors need to know they can move money freely, that courts are predictable, that markets are transparent, that the government won't suddenly lock capital inside the country. China still controls capital flows heavily. Its financial system remains tightly managed. And global investors know the Communist Party ultimately sits above the market. That makes many countries nervous. The euro had potential too. Europe's economy is massive, but the eurozone has its own problem. It shares a currency without fully sharing a government, which is a bit like 20 people sharing a credit card while arguing about dinner. The European debt crisis exposed those weaknesses badly. Then there's gold, Bitcoin, BRICS, digital currencies, all constantly presented as dollar killers. But replacing the dollar is not like replacing a smartphone app. You're replacing the plumbing of the global economy. And global plumbing changes slowly, painfully slowly. Right now, around 58% of global foreign exchange reserves are still held in US dollars. Most international trade financing still happens in dollars. Global debt markets still run heavily through dollar liquidity. And when investors panic, they still rush into US treasuries. Even after financial crises. Even after money printing. Even after political chaos. That's because the dollar system benefits from something incredibly powerful. Network effects. People use dollars because everyone else uses dollars. Banks hold dollars because trade runs on dollars. Trade runs on dollars because banks hold dollars. It feeds itself. And once a system reaches that scale, escaping it becomes extremely difficult. But there's another layer most people never see. The dollar is not just an economic tool. It's a geopolitical weapon. Because global finance flows through dollar-based infrastructure, the United States can influence transactions happening almost anywhere on Earth. Sanctions become devastating. Banks can be cut off. Countries can lose access to global payment systems. Companies can suddenly find themselves unable to transact internationally. Iran experienced this. Russia experienced this after invading Ukraine. And every country watching learned the same lesson. If your economy depends on the dollar system, America holds enormous leverage over you. Which is exactly why countries are now trying to reduce that dependence. China and Russia increase trade in their own currencies. Central banks are buying gold at record pace. Some countries are experimenting with local currency agreements. BRICS nations openly discuss alternatives to dollar dominance. But here's the uncomfortable reality. Most of these efforts remain small compared to the scale of the existing system. Because building an alternative requires more than frustration. It requires trust, liquidity, massive financial markets, legal stability, military security, and decades of credibility. America spent nearly a century building that structure. And despite all the headlines, global investors still often trust American dysfunction more than foreign uncertainty. Which says a lot about the state of the world. But the dollar system does have vulnerabilities, serious ones. America's debt is growing rapidly. Interest payments alone are becoming enormous. Political polarization keeps worsening. And the more the US uses financial sanctions as a weapon, the more incentive other countries have to build alternatives. There's also a deeper contradiction at the heart of reserve currency status. For the world to have dollars, America must keep supplying dollars. That usually means running deficits, importing more than it exports, sending dollars abroad continuously. In other words, the very thing that helps the dollar dominate globally can weaken America domestically over time. Factories move overseas, debt rises, financial markets grow more powerful than industrial production. Wall Street thrives, Main Street often doesn't. And eventually people start asking a dangerous question. Is the system benefiting the country, or just sustaining the currency? Because reserve currency status looks glamorous from the outside, but maintaining the global financial order is expensive. America effectively provides the world with safe assets, military protection for trade routes, financial liquidity during crises, and stability for global commerce. That role comes with enormous advantages, but also enormous pressure. And yet every time people predict the end of the dollar, reality keeps getting in the way. During the 2008 financial crisis, caused largely by the American financial system itself, investors still rushed into dollars. Think about how absurd that is. The house catches fire, and everyone runs inside because they believe it's still the safest building in the neighborhood. Then came the pandemic. Trillions more printed, massive stimulus, exploding debt. Again, predictions of dollar collapse flooded headlines. And again, the dollar remained dominant. Not because the system is flawless, but because scale creates inertia, and financial inertia can last a very long time. The British pound once ruled global finance too. For over a century, London sat at the center of world trade. Then slowly, over decades, power shifted toward America. Not overnight, not through one dramatic collapse, but through wars, industrial growth, financial expansion, and geopolitical change. That's how reserve currencies usually die. Slowly, then suddenly. Which means the real question may not be whether the dollar will eventually lose dominance. Every empire eventually weakens. Every system eventually changes. The real question is this: what replaces it? A Chinese-led system? A fragmented multipolar currency world? Digital currencies controlled by central banks? Gold-backed trade systems? Something nobody has invented yet? Because the danger isn't only the decline of the dollar. The danger is uncertainty during the transition. The current system may be imperfect, unequal, politicized, sometimes deeply unfair, but it is still the backbone of global finance. And replacing the backbone of the world economy is not a software update, it's open-heart surgery. Right now, the dollar still rules because the entire world is connected to a system built around it. Trade, debt, energy, banking, markets, military alliances, all reinforcing one another. But systems that look permanent often appear strongest right before people seriously begin imagining alternatives. And for the first time in decades, more countries are starting to imagine them. The question is whether they can build something strong enough before the cracks in the current system become too large to ignore. Because history suggests one uncomfortable truth: the world's dominant currency usually survives, until suddenly it doesn't, and nobody ever knows exactly when that moment arrives. Like, share, subscribe for more interesting videos, and comment below. What do you think eventually replaces the US dollar, if anything ever can?